The broader equity markets held the spotlight last week with the most extraordinary set of ups and downs. And the good news is that agribusinesses did very well, or at least most commodities headed north. Let's start in Chicago, where a massive slash in the corn production forecast spilled into the wheat pit, and with corn supply so tight, these strong prices could be around for a while, even though the wheat outlook is really quite bearish. So corn lifted to well above $7, wheat went up 10 cents a bushel, and soybeans faded a fraction. Local futures trading supported this overseas trend, even though the global wheat production forecasts are all up. So WA wheat for January was about steady, and East Coast wheat lifted a fraction. Word from the paddocks is that conditions in the east are drying off very fast. On the spot markets, there's demand for wheat at $270, and sorghum is also popular. As mentioned, there's some unease in cropping country, even though this time of year is traditionally dry, especially in the north. I should also mention there's a significant amount of supplementary feeding in cattle country. The grass, well, its volume has lost most of its zing. In New York, cotton went against the overall trend as production estimates went up when the market expected the opposite. So cotton slipped more than 7 cents. And across in the sugar pit, the market strengthened on the back of yet another production downgrade out of Brazil. Back home to the sale yards, in this last month of winter usually sees a general lift in the indicators, but the global problems and the strong dollar now make this problematic. Demand for young cattle remains enthusiastic, and prices for weaner cattle have reached new highs, and feedlot demand is also firm. Intermediate to long term, there'll be a close watch on that massive volume of cattle in the north getting too fat to export, and slowly but surely they'll be drifting down to southern markets. And there's been some action in the live trade. 2 ships with slaughter cattle left for Indonesia last week. I'd hate to think what that eldest shipment owes the company, but at least it's on the way. Quotes out of Darwin, surprisingly good. Steers $1.75 and 15 cents less for heifers. Lamb numbers were down last week, and the better quality was with the lightweights, so the indicator slipped. And the sheep market was shown no mercy as restockers stayed out of the market. Both those prices are well down on this time last year. And the bull boys are back in business after a holiday, and it's a real struggle here coping with the yo-yo equity market and the up and down currency. The Eastern Market Indicator has slumped since the last sale by more than 4%, and pass-in rates were unusually high. And that's the Landline check on prices.